So let's begin. So good evening, everyone, and welcome to tonight's masterclass. For those of you who don't know me, my name is Francois. I am your market analyst here at ATFX Africa. And tonight we are going to be discussing a very specific topic, from going from beginner to consistent trader. But I have a few things to clarify, okay? The topic of tonight's session is how to improve as a beginner trader. But, and this is a very, very big but, this is not a session for someone who has never seen a chart, okay? We will be focusing on that specific group of traders who already understand the basics, things like leverage, CFDs, tradable assets, such as indices, stocks, Forex, you name it, but who are not yet consistently successful, okay? And the reason why I'm saying that is because of the fact that that is my goal for 2026, is to assist traders like yourself to become consistently profitable. Okay, I want you to start making money in 2026, and that is what I am here to help with tonight. So the goal here is simple. How do you move from being a beginner who is struggling? Okay, so anyone attending this tonight, if you are watching the recording, doesn't matter. If you are not yet profitable, if you are not yet generating consistent profits, this session is for you. It's as simple as that. Okay. I want to be speaking to those who are still struggling to get to that consistency point. And if you are one of those traders, pop me a message in the comment section, pop me a message in the chat section, Q&A section, wherever. Let me know. Okay. Because from here, I want to turn you into a trader who is more structured, more disciplined, and who is improving steadily so we can get to successful, profitable trader by the end of 2026. However, for that to be achieved, I need the maximum amount of participation from everyone tonight. I already see I've got some messages saying good evening. I appreciate that. Good evening to all of you as well. So please interact with me as much as possible. And I will have a question for you to kick things off. How long have you personally been trading? Is it less than a month, 1 to 3 months, a year, 2 years? Remember, you can be trading for the last 3 years and still be a beginner trader. And that's the message I want to try and get across tonight. Is you can be a trader for the last 3 years. If you are not consistently profitable yet, you are still a beginner trader. Okay? So don't feel ashamed. Let me know, where are you at the moment? How long have you been trading? Now, for me, this webinar is intentionally different from many others that you may have attended. Okay, we are not following a strict slide by slide strategy presentation. Yes, I do have a presentation for tonight, but I'm going to be talking about things that you need to improve. And I'm going to be very direct tonight. And these are things, I hope you have a notebook. I hope you have a pen, because I hope you're going to be making notes. I hope you're going to be maybe watching this recording again so that you can get to a point where we are moving into that profitable realm. Okay. So tonight, this session was built after reviewing multiple sessions, one-on-one sessions, private coaching sessions that I've had with various traders. I've got a lot of feedback via email, and I had a look at the challenges discussed. So the challenges I want to discuss today are real, are common, and shared by many traders such as yourself in the same position as you. By discussing these challenges openly, everyone can learn not only from their own mistakes, but from the experiences of others. Okay. Now, before we do continue, it is important to clarify that tonight's session is purely for educational purposes only, and that at no point in stage during this session will I be providing financial advice. So the focus is on awareness, structure, understanding, so you can make better decisions as you progress in your trading journey. Now, many traders describe themselves as beginners, but that alone tells us very, very little. Okay. A trading profile goes far beyond your experience level. Your profile defines what you trade, when you trade, how often you trade, and how you manage risk. Now, as a professional trader and institutional trader, you always know your profile. Beginners often don't, okay? And that is one of the biggest reasons for that improvement becomes difficult, okay? So again, I'm going to be asking a lot of questions tonight. Like I said, this is going to be a little bit of a different session. I'm going to be asking you a lot of questions. If I had to ask you to describe your trading profile today, could you clearly explain it? All I actually want is a yes or no, okay? Could you clearly describe your trading profile if I had to ask you right now? Simple yes or no would suffice. So, one of the most damaging mistakes beginner traders make is setting unrealistic timelines. Now, many traders expect the market to, well, many traders, I would say, enter the market expecting to trade for a few months, make a large return, and then, I don't know, exit permanently even. Statistically, these traders are almost always unsuccessful. Okay. Trading requires patience. Trading requires learning and gradual improvement. Emotional pressure caused by unrealistic goals often lead to impulsive decisions, over trading, and unnecessary losses. Okay. I'm not really getting a lot of messages here tonight. Please, as I said, make use of that Q&A section, make use of that comment section, and pop me a message, okay? Because this session is very, very important for each and every one of you, okay? And if I'm a little bit loud, let me know as well, okay? Okay, I see I have a comment here. I could not describe my profile to you as I probably still learning all the fine details. I love that answer. It's very honest. So I do see there's a few other ones here. Sorry, I missed a bunch of comments. It was on the one side. I'm a beginner with fire desire to become profitable, trading for 12 months now. Okay. Gone from serious losses to more manageable losses, but looks like I might start progressing very slowly at the moment. Perfect. For those of you open to commenting, even if you pop me a message actually telling me what are your trading goals, okay? How much do you want to make a month as a trader? How much you want to make a day as a trader? Um, like, what are your goals? Okay, I want to know. And I want to discuss that tonight. Please, talk to me. So, As a beginner, your first objective should not be financial gain. Okay? Let's start there. It should be understanding consistency and control. A responsible approach is to focus on learning how an asset behaves, understanding your success rate, and gradually improving it. Okay? Profit targets come later once structure and discipline are in place. Now, as a question, have you ever felt emotional pressure because of a profit target? Okay, like I said, I want to get you profitable. Okay, but I need to change a lot around your mindset, your approach, everything tonight. And that I'm gonna do a big crash course, and I'll expand on this if you guys want me to at a later stage. But like I said, I want to get you to profitable, but I want to get rid of all the extra that we normally, the baggage that we carry along. So answer this for me. Have you ever felt emotional pressure because of a profit target or a deadline you set on yourself? And the second part for me is almost more important, the deadline that you have set on yourself. Because a lot of times we want to be profitable, but we want to be profitable by a certain day. And that makes it very difficult because we are not focusing on the process. We are not focusing on being consistent. So help me out here, okay? And let's go from there. So the key here is gradual improvement. Okay. A beginner's success rate is often low, sometimes close to break even or even negative. Okay. But moving from 45 to 55% success rate is meaningful progress. From there, improving your risk to reward can bring consistency. Each phase in your trading builds towards stability rather than quick results. Okay. Now, one of the most common problems beginners face in trading is trading without a plan. Now, a trading plan does not guarantee success, but it provides structure. And I do hope by now, if you've traded, you've got a trading plan in place, okay? Because without structure, it's impossible to measure progress. It's impossible to identify mistakes. It's impossible to improve your consistency. So, answer me this. Do you currently follow a written or defined trading plan? Even a simple one, okay? And if not, I am going to ask that you send me an email. My email is marketbrief@atfxafrica.com. Okay. And send it to me after the session. And I will send you a trading plan template so that you have something to work off, so at least we can get to some sort of structure tonight. And again, I apologize if I am a little aggressive tonight. Okay. But my goal for 2026 is getting all the traders who follow me and who's a part of the ATFX family to become consistent. Okay. And if I have to drag you kicking and screaming, I will do it. I don't care. So, as I said, if I come across a little bit aggressive tonight, I apologize, but it's coming from a good place. Okay. See, I have a bunch of comments here. I don't have a set financial goal except that this must become my career. I like that because I feel this is a serious financial freedom aspect, or I feel there is a serious financial freedom aspect to it, with jobs being scarce. Fair and fine. Here's the target one that I asked. Um, again, I do aim for at least $50 a day. LOL. $50 a day is reasonable. It's acceptable. Okay. And it's a good starting point. But again, we have to have good risk management. And we're going to talk about that as well. So what am I saying here? You can't have a $50 a day target with $1,000 account. Okay. If you do, you're risking large amounts of your capital. I mean, depending on your risk to reward ratio, you're going to be risking in excess of 5 to 10% of your account per trade, unless you are taking multiple small trades. So for instance, if you are an intraday trader and you're doing 5 trades of $10 risk in a trade, that's fine. Then you're on the right track and you're heading in the right direction. So then I'm happy with that. $250 to $300 weekly. I like that answer too. I believe I am using a trading plan, but I will send you what I think I have as a trading plan. Thank you. I look forward to that. Looking forward to just getting that email. Okay. I am more than happy with how you are. I appreciate that too. You know, accept me with all my flaws as I am. See, I have a comment here from Ben as well that I almost missed. Would like to make a decent profit, 5,000 Rand a week. That is a decent profit. 20,000 Rand a month. It's a good monthly income. I think on my side, I'm still trying to find my trading style. Sometimes I hold my positions for too long. Sometimes I enter for sniper entries and exit quickly. However, improvement is there and I'm enjoying the journey. Kwamisa, I actually love that comment because that is something I'm going to be discussing tonight as well. And I'm going to be covering quite a few things. And I'm going to, again, if there's anything, please stop me, ask questions, and I'll go through all of it. So, but I do like that answer because, yes, there is a lot that is actually covered in that statement that could be preventing success. Okay. So let's discuss actually something in that realm. Okay. Part of having a successful trading strategy is choosing the right asset. Okay. Me, everyday trading, I have 2 assets. That's it. Okay. I'm doing this for 11 years. I don't have a screen full of stuff. Yes, as my profession, as an analyst, I analyze a large amount of instruments and I write articles and all this kind of stuff. But when I day trade, when I am sitting charts in front, buttons ready, entering multiple positions at a time, I have 2 assets I focus on. And I never trade both assets at the same time. Okay. I focus on one. Like, for instance, today, I had a very profitable day. I'm happy to say that. I had a good trading session. And what did I do? I only traded gold. Okay. Yesterday, I only traded gold as well. Actually, most of this week. So Monday as well. However, last week, the majority of my trades came from the S&P 500. Why? Because my setups and everything were a lot clearer last week. This week, my setups on S&P 500 wasn't as clear, but gold just spoke to me again this week. So my focus becomes very, very singular with my trading. And personally, I believe that is a large attribute to my success as a trader. And it saddens me a lot of times when I see traders who have screens and screens of trades open and charts open and everything because they just want to look at everything and they don't want to miss an opportunity. And they're looking at so many charts, so many opportunities. And at the end of the day, they just miss all of them because there's no clear focus. So many beginner traders trade multiple assets in an attempt to find an opportunity. And this often creates confusion rather than improvement. Every asset has different characteristics, volatility patterns, and influences. So by focusing on a single asset, as a beginner, you gain familiarity. My tongue's twisting on that one. Faster with that specific asset, and you start building confidence. You start getting more efficient on that specific asset because when Trump talks, I know what's going to happen. When a news release comes out, I know what's going to happen. When market opens based on characteristics during the day, I know what's going to happen. Why? Because you start living and breathing that specific asset because it's all you focus on. You're not focusing on 5 different currency pairs and 3 commodities and 2 indices and a couple of cryptocurrencies in the background just for fun. No, you have assets that you become singularly focused on. Now, like I said, for me, those assets are S&P 500 and gold. That's what I day trade every single time. And I've gotten to the point where moves on these assets don't surprise me anymore. Okay? Because it's almost textbook for me by now because of the fact that it's my asset. I know exactly what it's going to do, how it's going to react, what the consequences of certain news is. But if I spread out, it's a lot to process, to analyze, to take in, and then execute. Okay. And there are multiple asset classes. You are able to, for lack of a better word, choose your poison. Okay. If you want it to be oil, let it be oil. If you want it to be natural gas, let it be natural gas. If you want it to be Bitcoin, be Bitcoin. If you want it to be gold, be gold. Okay. But become obsessed. It's within that obsession that you are going to find profitability. But we have to, in 2026, become obsessed with achieving your goals, getting to a point. But in order to do so, we have to become singularly focused. Now, there are consequences for consistently changing assets. Okay? And let's discuss those. So, even experienced traders become beginner traders again when they switch to a new asset. And I'm going to say that again. Even experienced traders become beginner traders again when they switch to a new asset. Why? Because your consistency, your repetition, everything you learned, you have to start again because that asset reacts differently to certain conditions within the market. Okay. And if you are changing assets frequently, you prevent meaningful improvement because the way gold reacts to Trump speaking is not the same way USD JPY reacts to Trump speaking or the way NASDAQ reacts to Trump speaking. So every time you are bouncing between these various assets, you are in essence taking yourself from experienced trader back to beginner trader. And if you are consistently doing this, you are never getting to experienced level because you are consistently staying beginner. Because now, even when you go back to a previous asset, things might have changed, conditions might have changed, markets might have changed, and you didn't move through that process with it. So again, you're going back to something you used to trade, but again, now you back to beginner status. Am I making sense? And tell me, is this currently an issue that you are struggling with? Are you consistently switching the asset you trade? And if you are, how often are you switching? On a daily basis? On a weekly basis? Are you doing it once a month? Be honest. Pop me a message. Pop me a comment. Let's talk about it. So I like this comment. I try and focus on Euro USD and Ethereum. Those two. Okay. But then here the issue comes in. I sometimes find myself looking at natural gas, gold, silver, and USD JPY. If you are a long-term swing trader, you can have more than one asset. 2, 3, 4, 5 assets. Okay. Because as a swing trader, you are looking at much larger positions and bigger key points, but as well, swing traders require larger amount of capital. Okay. So I'm going to ask, if you are either a scalp trader or a day trader, and you are giving me a list of 6 pairs, we are having a problem right now. Okay. And again, like I said tonight, I am going to be brutally honest, and I'm going to be honest with the people here because I believe you are here because you want to do better in 2026. You want to become profitable. Okay. And as I said, I'm going to drag you there kicking and screaming. But for that to happen, we need to make some hard choices. Now, if your focus is Euro USD and Ethereum, let your focus be Euro USD and Ethereum. And become obsessed with how those two pairs move. And forget about the rest. Okay? There's a range of asset classes, and you can make a lot of money just trading just those two. Robert, I hope I'm making sense. Okay? Baron says, I agree, never a jack of all trades, rather a master of one. 100%. Okay? So in essence, precise focus on a single asset brings familiarity to often unseen nuances that affect the market. I couldn't have said it better myself. Okay? That is a perfect explanation of what I am trying to get across tonight. So many questions, there's so many comments here I just want to get through. Tabo, you make so much sense. Now I see that's where confusion and regress begins. Yes. Thank you. I'm getting through to some people. That's all I'm mattering right now. Okay. I'm getting through to some people. Yes. Yes, I find myself that setups work out better on TradingView because I have more fear with live accounts and tend to close prematurely or have stop loss to be triggered by 1-2 pips. Okay, I'm guessing you're saying TradingView because it's a demo account, and I agree on that. But again, even if you're on a live account, demo account, that doesn't really matter right now. And if you are being tapped out by 1 or 2 pips, maybe have a look at your risk management. Okay. I've always said never smother a trade. Okay. There's no reason to give a trade zero room to breathe. Okay. We need to give our trades room to breathe. So, like for instance, on gold, I never use a stop loss at the moment, just because the fact that gold is so volatile at the moment. I never use a stop loss that is smaller than $10. Again, what I mean by $10 is $10 move on gold. So if I'm entering, for instance, at 355, my stop loss at its closest is 345. Okay, I never put it closer than that, because otherwise I'm not giving my trade room to breathe. So maybe have a look at things like that as well. Okay, cool. Let's actually talk about that. Let's talk about survival first. Okay, so because we need to turn risk rules into long-term improvement. Okay, if we don't get this right, a lot of things are going to fall by the wayside. So most traders stop improving. Okay, and there are some ways to fix that. Okay, I've been trading. Well, let's put it this way. I've heard a lot of traders say the following. Okay, I've been trading for months, but I'm not getting better. This is not useful, and it doesn't automatically mean that you lack ability. In most cases, the problem is how you are gaining experience. Many traders believe that simply placing more trades equals more learning. And in reality, random experiences do not produce skill, focus, repeatability. That experience does. Okay. And this is also why I've mentioned so many times in the past that when you are entering a trade, you need to be entering that trade on a very precise trading plan. There has to be rules as to why I'm entering into a trade, and I can never deviate from those rules. Okay. Now, trading many different assets prevents meaningful learning. We've discussed this already. Switching strategies as well resets your learning progress. So we've covered the part in detail now from switching between various assets, but jumping between various trading strategies has the same effect. Okay. Experience only matters if it's consistent. There, just because you've been doing something for 10 years doesn't make you an expert. Okay. Your experience only matters if you have consistency. Improvement requires repetition under similar conditions. Structure is more important than activity. Okay. That being said, question. If you look back over your last month of trading, we're almost the end of January, last month of trading. Now, we've already discussed you guys are jumping between assets. I'm not even going to ask if you've been trading the same asset, but have you at least been trading in the same session? Or have you at least been trading with the same approach? Or was everything different every time? Like today I'm trading gold, tomorrow I'm trading NASDAQ, the next day I'm trading Bitcoin, then I'm trading a reversal strategy, then I'm trading a breakout strategy, then I'm trading a trend following strategy, then I'm trading in the Asian session, then I'm trading in the UK session, then I'm trading in the US session. Guys, that is just chaos. And if this is you, tell me, and let's fix it tonight. Because From tonight on forward, I want you to focus on one thing and one thing alone. Okay? So we're going to call this the 111 rule. Not 101, 111. And what is 111? 111 is one asset, one session, one job. That's what you have. You have one asset, one session, one job. And let's break that down. So, professional traders do not analyze and trade the entire market. They specialize. Okay? You will never see an institutional strategist covering everything from Forex to commodities to indices and equities all simultaneously, because each market behaves differently, reacts to different drivers, and moves with different rhythms. Now, when a beginner trades a new asset every day, you are, in essence, unknowingly starting over each day. And why does this matter? Because every asset has unique volatility behaviors. Sessions impact price movement differently. Price movement on, let's just use gold. Price movement during the Asian session and the UK session and the US session are day and night from one another. So I can have a bulletproof gold trading strategy in the UK session that is worth nothing in the Asian session, because price movement is different. Indicators, if you are using indicators in your trading strategy, have behaved differently across instruments as well. Okay? So there as well, we don't have a one size fits all. A trading strategy using the MACD indicator, for instance, can work better on certain assets versus others. Same with the stochastic, same with the RSI, same with the ATFX. And you will only know if this is a high conviction option if you are obsessed with one asset, one session, and your one job. Consistency accelerates pattern recognition. That's why I'm saying when I look at gold or S&P nowadays, nothing surprises me anymore. Why? Because I can look at it and the pattern recognition just becomes instantaneous. I can see what's happening because it's what I do the entire day. Mastery comes from narrow focus, single mind, not expanding it. So, for us to move from a beginner, the most effective path forward is choose one asset, trade it in the exact same session every single day. And while doing this, apply the same rules repeatedly. And do so for 6 months of focused trading on one asset. And I promise you, this will produce far more growth than 6 months on random exposures and various assets. Okay? Because you will be able to fine tune your trading strategy and your approach to a level that you have not experienced yet. And I hope what I'm saying tonight is getting through to some people. No one has left yet. Okay, actually our numbers have increased. So it's at least showing some positivity on my side. Let me see here. Juliet, I trade gold, I make small profits, but I don't understand the news. Okay? Juliet, that is a very big question to ask in one statement, okay? Because of the fact that various news affects gold in extreme different ways, okay? But what I will do is let's do an entire session on how, for instance, various news reports and various news aspects can affect gold. I will set up a session like that for this masterclass series. Is that fair? Let me know. Yes or no? Okay. You're making perfect sense. I feel so silly when hearing how I might have been able to do better. I don't have anything to add to that. Because that statement just says it all. And just reading that already, just it hit deep. Okay, it really did. I'm sorry that's me understood. So one asset, one session, one job. I think we've got that. I can't believe I've been going for an hour already. I don't think I'm close to done, but I don't think I'm done yet. They'll have some notes. So, question. If you were forced to trade only one instrument for the next 3 months, which one would you choose and why? Let me know. Okay. So, we've been discussing sessions and timing and risk awareness. Now, markets are active at different times for different reasons. While some markets technically trade 24 hours, like Forex, for instance, participants and liquidity are not equal throughout the day. Okay. Risks increases when trading outside an asset or outside an asset's most active session. Okay. So for instance, anything to do with the US dollar will be most active during the US session. But if you are trading, for instance, something like or JPY, I'm just going like way off the reservation here now with the currency pair, or JPY, both the Australian dollar and the Japanese yen will be most active in the Asian session, not during the US or UK session. And we need to start understanding these various aspects. And there are some core session concepts. As I said, US assets move most during US session. Simple. Okay. Low participation equals weaker price movement. I think this is relatively self-explanatory. And this makes that your analysis is less reliable during inactive hours. Okay. Volatility is session dependent. And it doesn't always mean, like I said now, with or JPY, for instance, it doesn't necessarily mean that the US session will have the most volatility for that specific pair because that pair moves more in the Asian session. Okay. So timing is part of risk management. Risk management is not just your stop loss. Trading a US based asset while the US market is closed often leads to slower price movement, erratic behavior, increased false signals. Okay. And this is where people come and say, my trading strategy doesn't work. Kind of does. Your application is probably the one that doesn't work because you are trying to put a square block in a round circle. It's like that little game kindergarten kids play. And where the one shape doesn't fit inside the other shape. And a lot of times your trading strategy in the wrong session on the wrong market is you trying to fit a square block into a circle. It's not going to work. So risk management is not only how much you risk, it's also when you trade. I hope that helps. But that doesn't mean that stop losses and take profits and trailing stops are not important, okay? Risk management becomes practical when trades are controlled before they are opened. Every trade should answer 3 questions in advance. Where am I wrong? Okay. And where am I wrong is where your stop loss needs to be. Okay. Because if the market gets to that point, and this is what I meant earlier by don't put your stop loss too close. So when you are placing your stop loss, ask yourself, if the market gets to this point, let's for instance say you're entering a buy, and now you're placing your stop loss here at a level. Ask yourself, if the market gets here, will I enter another buy? Would I enter a buy at this level? If the answer is yes, then at that specific point, you are not wrong yet. So your stop loss is too close. When the market gets to your stop loss, the trade you have entered should be wrong. If I enter a buy at this level, when it gets here, that is supposed to be your change of character level. Remember, we've done SMC in a significant amount of detail. Okay. So you guys understand change of character by now. You understand break of structure. And if you don't, please go watch one of the recordings that we did on that specific sessions. There's hours of this content. So this is what I'm trying to say. Where you place your stop loss, that is the point where I am wrong. Not I can enter another position there. I am wrong. Market is going in an opposite direction. That's when you enter. So that's the first question. Where am I wrong? Second question. Where am I taking profit? We have to ask these questions in advance before entering the trade, not after I'm in the trade. We need to know, where am I taking profit? And then number 3, how will this trade close if I'm not present? Okay. Do I need to babysit this trade? I'm a scalp trader. I need to babysit trades. Okay. My trades need constant supervision. Just a little joke. So let's discuss the various order types. Okay. Your stop loss. This caps the maximum loss that you can take. If you've never used the stop loss, that's why it's there. It caps the maximum loss you can take. You'll take profit. This locks in gains automatically. If you are using a trailing stop, this protects profits as price moves. So if you want to let your winners run and just trail it, that's also okay. A stop loss should never surprise you. Okay? If a loss feels shocking, it means the trade was not planned properly. If you hit a stop loss and you're like, wow, that hurt, you didn't plan your trade. And if you're not planning your trades, you cannot expect to become consistent. I had a comment earlier. I want this to be my profession. If you hit a stop loss and it's shocking, we are still in the amateur leagues. We are beginner traders. When this is your profession, that cannot shock you. Trailing stops, if you are using this, adds an extra layer of discipline. And this is why trailing stops is not for everyone, okay? But it can reduce emotional decision making because you won't necessarily just have on a close a trade. You can move your stop loss. It does automatically protect your gains and adjusting risk as price moves, but it can also knock you out of a trade prematurely, okay? Especially if your trailing stop is way too tight. So let me know in the comment section, because everyone here has entered a trade. Before opening your last trade, so literally think of the last trade you enter. Before you opened that trade, did you know exactly how much you could lose on that trade? Yes or no? Or did you only realize it after the trade moved against you? Be honest. Now, with your trading, there is also a few additional things we need to understand. Okay? Let me just see. There's a bunch of comments. Thank you, Francois. Yes. NASDAQ for scalp trading US session. Nice. One asset, one session. I like it. We're getting that mindset. Okay. One asset, one session. Euro USD, because my account should be better suited for that, as it's only a $50 one. Okay. One asset, one session. Yes, I know all the time. Brilliant. I like that answer too. I'm assuming that's for the question I just asked. Let me see. Juliet responded to my question. Yes, I would appreciate that. Thank you. Okay, cool. Happy with that. It doesn't look like I missed any other questions or any other statements. Wait, no, here's one. GBP USD, because it pays well. Perfectly acceptable answer. So if you want to get, again, to professional trader, we need to understand all aspects of the trading account that we are using, including leverage, margin, and exposure control. Now, while leverage allows you as a trader to control a larger position with smaller capital, it also magnifies the mistakes that you make. So, yes, leverage increases exposure, but leverage does not increase accuracy. If you have a small account, you require tighter control. So if it's $100 or $500 account, you definitely require tighter control. Your margin level, if you have a look on that on your trading account, when you see margin level, this reflects your account's health. I normally have a rule. My margin percentage is never allowed to be less than 1,000%. Just because of the fact that as well, you get a margin call when that gets to 100%. So at all points and stages, I keep my margin percentage at 1,000% and above. Anything lower than that, I'm leaning to overexposure. And overexposure causes you to make forced decisions. So in other words, decisions that are not well thought out. Okay. Now, if you've never known how to calculate your margin level. It's your equity divided by your used margin times 100. So you can write that down. It's equity divided by used margin times 100. Now, a falling margin level. So as your margin percentage consistently decrease, this indicates increasing risk. Okay, so when margin pressure starts appearing, as a trader, you only have three options in essence. One, add money. So add capital. Number two, close some of your trades. And number three, and this is not advised, do nothing and hope. Now, I've said multiple times in the past, hoping and praying is not a trading strategy. So risk management aims to prevent reaching this point altogether. And then, regardless of what type of trading strategy you have, please never fight the trend. One of the fastest ways to destroy capital is fighting market direction. I did a post on LinkedIn in the beginning of the week where I had different shapes and it said octagon, hexagon, I don't know, something else, and then it said portfolio gone. Because I discussed risk management on this specific post, and someone commented and it was beautiful, and it said portfolio gone is everyone shorting gold at the moment. And I couldn't agree more. Because if a trend is that strong, consistently trying to predict the top is how you are blowing your account. And you can be a reversal trader, not saying change your trading strategy. But again, we're going back to, is your trading strategy compatible with the asset you are trading? If a certain asset is moving with that amount of conviction and you are a reversal trader, change the asset. But in essence, you wouldn't have to change the asset if we had all the alignment from the beginning. I hope I'm getting through here. I'm trying. I really am. I've seen so many traders stay in losing trades, not because of analysis, but because of hope. Because we are refusing to accept that we are wrong. Okay, and this is where fighting the trend becomes so dangerous. So here are a few dangerous habits that I would suggest we start changing. Okay. Averaging into losing trades. So what does that mean? Trade is going horribly against me, but I'm just adding positions. Okay. Until there's no more positions to add. Holding trades until kingdom come doesn't help. Okay. Ignoring clear trend direction. Refusing to exit small losses. If the loss is not damaging to your account, but you can free up margin and move on, take the loss. Number 5 is probably one of my biggest ones. Confusing trading with investing. This is not the same thing. As a trader, I'm not an investor. Investing is something different. You can be an investor and a trader, but don't confuse your trading with investing. Trading is not about being right eventually. Okay? I'm not Warren Buffett. I can't be in a trade for the next 6 to 9 months. Your swap fees will be through the roof. Trading is about managing time with probability. If the market is trending against you, close the trade, reassess, look for opportunities in the new direction. Small losses are a part of professional discipline. You are never going to be 100% accurate. You are never going to win every single trade. And to maximize on these type of trades that you are entering that are going in your direction, learn the art of scaling in and scaling out. And this will actually allow you to maximize on so much of your trades. So instead of entering one large position at a single price, you can manage risk by splitting exposure, by taking the scaling approach. Scaling in spreads your entry risk, and scaling out locks profits progressively. Multiple entries reduce your timing pressure. So you don't always have to get the best entry. You can kind of go for the second or third best entry and scale as the entry gets better. Your position sizing becomes a lot more flexible as well. Your emotional stress is reduced. So scaling is not about increasing your exposure. Okay, I'm not saying now if you were used to trade with a 0.1 lot size, enter enough trades that there's a 0.2. No, but we can enter 10 0.01s to get to that same, but we can have much better entries and a much better range. Okay. It's about managing uncertainty. So this approach allows you as a trader to enter in a zone instead of an exact price. It reduces your dependency on perfect timing and control overall risk pressure. And with this, your risk to reward and your success rate becomes essential. Because remember, trading is a numbers game. Probabilities are mathematical, not emotional. If you understand the math behind your trades, you will remove the emotional aspect to all of it. There are two variables that determine your outcome. Number one, your success rate. Number two, your risk to reward ratio. And you can balance these things in various ways. As a trader, you do not need a high win rate to succeed. But your risk to reward ratio and your win rate do need to align. So here are some key principles. Consistent sizing, so consistent lot sizes, simplifies your analysis. A fixed risk exposure improves your predictability. Different models can be profitable depending on how you structure it. And at the end of the day, statistics outperform your opinion. Numbers will remove the emotion, and this is where trading becomes a business and not a guessing game. So different traders can succeed with completely different profiles. You can have one trader who has a very high win rate. So let's, for instance, say winning 80% of their trades, but with a very low risk to reward ratio, maybe even a negative risk to reward ratio where they're risking 1% to make 0.5%, but they have a big success ratio. Or you can have a terrible success ratio and have a high reward where you are risking 1% to make 4%, but you are only right 40% of the time. So in essence, a negative risk to reward with extreme consistency can still be profitable. What matters is the mathematical compatibility, not the perfection. So, and again, this is where your journaling and everything's going to come in, because if you can track your consistency, you can track everything surrounding your trades. When you start understanding this, you stop chasing perfect strategies and you start managing your expectations and you start focusing on a repeatable process. Now, to do this, as I stated, you need to start reviewing your trades. Improvement only happens through review, whether this is every week or every day. But as a trader, you should ask yourself when you are reviewing your trades, could my winners have run for longer? Were my losses cut early enough, or was I stubborn? Was volatility handled correctly? Was my risk consistent? Did my rules hold up? Or did I just randomly enter into trades because I felt like it? And you will only know this by reviewing your trade journal to turn your experience into insight. And when you are analyzing the market, Juliet earlier asked about fundamentals or news and how it affects the charts. And I'm going back to that being obsessed. One asset, one session, one job. If you are not combining your analysis, now, and again, I'm going to get crucified for saying this, but it's fine. You can understand technicals backwards and not understand news, and you will not be consistent. Remember, that's the essence of tonight's class, being consistent. And if you do not understand your technical analysis, in other words, price behavior, or your fundamental analysis, what is your fundamental analysis? It's the driver behind the price. Or order flow context, which is the participation. Now, order flow comes in understanding the participation and understanding the session. If you do not understand these key perspectives, you are not obsessed yet. And consistency is gonna elude you because you're gonna get conflicting signals and uncertainty. But by aligning these, you will reduce the noise. So in essence, the core message of this evening session is risk management comes before strategy. Let's start there. Risk management comes before strategy. Consistency creates improvement. Mathematics beats emotions. Survival enables opportunity. And discipline compounds over time. So focus on staying in the game first, and then develop your skills with time. And your capital and your return on investment will come. Because capital doesn't return once you've blown your account. And that kind of brings me to the end of tonight's session. I hope there was value for you in this session tonight. And I hope we are going to take what I discussed during this session to heart. And we are going to drive and push and become obsessed with becoming consistent in 2026. Let me read the final comments before saying goodnight. Kwamisha says, gold New York session, sniper entry. Okay, cool. One session, one asset, one job. I like it. Let's see here. You're making a lot of sense. Yes, I am reminded of what you have said before. Rather wish you were in a trade than wish you were not in the trade. Absolutely. Thank you so much, Francois. This is golden. Valuable. appreciate it, guys. Traders, I know I went a little over time tonight. I know the session was a little longer than normal, but I think it was a good one. So, one asset, one session, one job. Thank you for attending. Trade responsibly. Continue building your foundation and continue striving for better. And as always, stay sharp, stay focused, and trade smart.